Hello, it's Robert Miner with Dynamic Traders Group with our short video for our YouTube and Twitter subscribers, where we generally take a look at just one market in detail for a probable setup and a trade for the following week. What I'm going to do this week's a little bit different. I'm going to look at like four major markets that we often look at in detail. I'm going to go through each of them very quickly because we're in about a 2-week time period when potentially there's going to be some major reversals in some of the major financial markets. So we're going to look at the S&P, Bitcoin, dollar, and gold. Brief update in each one of them so you can be prepared for what's coming up, I believe at least, in the next couple of weeks. Before we get started, I just wanted to impress upon you is that everything I teach in all of these videos is very practical oriented, how to make practical trade decisions. This is just some of the trading contests that I've won going back to 1993, where I was first place in the Futures World Cup trading contest sponsored by Robbins Trading Company. 2018, first place in the index and interest rate futures. That was only a 6-month contest with an 86.5% return. 2018 in the Forex trading contest, number 3 with a 70% return. How about 2019, 5th place in a Forex trading contest with a 38, almost 39% return. And in 2020, 4th place in the global derivatives trading contest with 134% return. So the point here I'm trying to make is that I actually trade, unlike most people that do these videos, and I trade pretty successfully. And I look at everything very practically. How do we make a specific trade decision? Where do we enter? Where do we put our stop, etc.? Okay, let's take a brief look at several of these markets. So this is the SPX weekly data, and it's the close only, each week's close. So let's take a quick look at this. There's a really important piece of information here, at least from my point of view, is that off of the December high, again, that was the weekly closing high, is this decline is a, more than likely at least, it's a correction, not an impulse trend. But it's not complete yet, at least I don't believe it's complete. It still has a ways to go on the downside in time and in price. Where are we at immediately, however? And let's take a look at, here's the 2 key pieces of information. Number 1, our proprietary DT oscillator momentum cycle indicator has reached the overbought zone. Typically, when it reaches the overbought zone, we're within about 3 bars, in this case it'd be 3 weeks, of completing, in this case, what we call a weekly high. So that's enough of a warning to be alert to. Pretty soon, the SPX is likely to roll over and continue to decline to a new low. So we want to orient our trading strategies in the next week or two to identify when this corrective advance is complete. More than likely, it's going to be within the next couple of weeks. We want to keep our eye on that 2 weeks from now, the next Fed meeting. But here's a really important piece of information here, why it's warning us that the new low is probable, is ever since this, what we call a bullish reversal from the oversold zone occurred back in May, is that this momentum cycle has now reached the other end of the spectrum, overbought, yet price is actually lower than it was at this momentum cycle low. That's called a momentum price bearish divergence, and it's a pretty serious one because this last several weeks has just been essentially sideways, hasn't made any progress at all, yet the momentum has reached overbought. So be prepared within the next couple of weeks, more than likely, for the SPX to roll over and decline to a new low. So this is gold weekly data. We looked at gold in depth, I think it was a couple of weeks ago, and this past week was ideally the maximum time before gold would make at least a weekly, if not a monthly low, and finish off this 5-wave decline. So we're in that time period. It hasn't made a reversal signal yet. Again, we don't forecast, we trade. What we do know is we're in extreme time period from when at least a weekly low should be complete. We know that our DT oscillator, our momentum cycle in the weekly, has been oversold for 2 weeks now. So that's 2 bars. That means we're within a bar or 2 of completing the next weekly low. And again, because it's a 5-wave decline, it should be more than just a weekly low. More than likely, it'll be a multi-month low. Here's our daily data. Again, 5 waves down. And this wave 5 in Elliott wave terms has subdivided into 5 waves as well. And the daily momentums, even a little bit longer look back, are dual look back oversold. So that's called a dual time frame momentum position to complete the higher time frame weekly low. But again, we trade it. We identify the opportunity. And by the way, this is in the ideal price zone and just above what should be the maximum price at 1678 before this weekly low is complete. We formulate a specific trade strategy. As of today, at least, is if gold closes above 1735.50, that weekly low should be complete, and gold should be sideways to up for several weeks, if not a few months. Keep in mind, though, that the advance is likely to be a correction within a higher time frame bear trend, not a bull impulsive trend onto a new high. So this is going to be a great setup when that reversal is made and confirmed. We call it a reversal confirmation signal. You might want to consider our DT reports if you want to be up to date when that signal is made. Let's take a look at the dollar. This is the dollar, and we looked at the dollar in detail a week or two ago, and everything's unfolding just as anticipated, at least so far. What we want to be alert to is that the second half of this month in July and going into this Fed announcement on July 27th should be the maximum time before the dollar completes this major bull trend from back in January 2021. It's textbook Elliott wave, 1, 2, 3, 4, and then this wave 5 is subdividing beautifully into 1, 2, 3, 4, and the fifth wave. This is the fifth of the fifth. The weekly momentums are overbought. They're warning the momentum cycles that were near a weekly high, which again, the next weekly high should complete a higher time frame high, a multi-month high, and at the latest it should be the last week in February, right around the Fed announcement. This is Bitcoin Weekly, and a key piece of information here, very much like we looked at the SPX, and this is a price momentum bearish divergence. Made a bull reversal in the weekly momentum cycle several weeks ago, and in fact around this time I was really looking for a setup on the long side. However, that setup was never complete. The trigger was never made, and Bitcoin ended up just going sideways for several weeks and then taking a big dump here about 5 weeks ago, and then sideways for the past several weeks. In the meantime, the momentum cycle is reaching overbought, indicating that probably within a week or two is Bitcoin's going to roll over and decline to a new low. So this is a real stern warning that the trade in the weeks ahead in Bitcoin is probably going to be on the short side, and that this is just a trading range correction, and when it's complete, Bitcoin's going to continue to a new low. This is Bitcoin daily data, and again, look at these declines, and then essentially sideways. This is slightly down over this period of time, and this is not necessarily Elliott wave, but it's a 5-section A, B, C, D, E, and then acceleration down for a 36% decline in less than, well, about 2 weeks. Again, 19 trading days over to this high, a little bit lower high, a little bit later, turned around, and then again, another dump, down 45.75%. Look at this. Doesn't this look, this is almost exactly like this area back here in May from the late June low. And again, once this daily momentum makes the next bearish reversal, which is likely to happen this coming week, Bitcoin has a good possibility then of continuing another decline similar to these two declines. And if we do the 100% alternate price projections of each of those, that would take Bitcoin down to about, let's just call it 14,300 to 12,400, somewhere in that range. Again, we don't forecast, we identify the position of the market and the probable outcome. In this case, everything's pointing to lower prices pretty soon in Bitcoin. So be prepared for that. In our regular reports, we follow these markets up in every report 3 times a week with the specific signals when they've made those reversals, and then importantly, when they confirm a reversal. That's really important for practical trade strategies. That's it for today. Robert Miner, over and out.